Welcome everyone to Implementing Value Pricing in Small Accounting Firms. This is sponsored by Avalara. And please keep in mind that there are updated slides that I changed literally about an hour before the presentation. I had to make some great updates that I think are relevant. So the link is in the top of the screen. And also you can click on the handout section and download it. So there's a very small change, but I would recommend downloading it. We would like to thank Avalara, who's a leader in sales tax compliance and provides solutions for helping you file, remit, and service your clients' sales tax needs. They have a plethora of free tools in their website that can help you calculate sales tax and offer low-cost solutions for filing your client's sales tax return. Avalara is also conducting an annual conference called Crush, currently in Washington, D.C. It is happening as we speak. And this webinar is promoting the conference as well. Obviously, if you're not there now, we'll strongly recommend that you consider attending the conference next year. For more information, go to avalaracrush.com. Several speakers in the accounting profession talking about these type of topics and other technical topics are available for tons of continuing education in these seminars, in these live conferences. So check them out, avalaracrush.com, and thank you, Avalara, for sponsoring this episode. My name is Hector Garcia. I'm a CPA based out of Miami, Florida. I run a regular run-of-the-mill accounting practice that does focus a lot in QuickBooks and bookkeeping services. So a lot of this information is derived or around the services that I actually provide. So everything that I'm here to present has been partially inspired by experts in value pricing, but have been my experiences applying this to a small accounting firm, which is what I run. There's my email and there's my phone number if you have any questions. I'm usually pretty good at working with my fellow accountants and colleagues for that. Once again, if you want to download the slides, you can use the link that's on the top. It's case sensitive, so you have to make sure you put all uppercase letters when it says it. So today's objective is let's understand what clients want from their accountants, how to have a conversation about what the clients value, and how to price based on that conversation. The agenda, we'll talk about value pricing as a business model, 1. 2, we'll talk about managing the risks, and I put risk in quotes, because there is a risk, but it really isn't, of transitioning to value pricing from hourly billing, if that's what you're currently doing. 3, we'll talk about having the value conversation, and 4, developing and presenting options. Let's get started with value pricing as a business model. First of all, all of this, or most of this, has been inspired by Ron Baker's books, Pricing on Purpose and Implementing Value Pricing. I will give you a quick summary of those books, but I do recommend you buy them and read them. Is 1, a well-executed value pricing strategy will increase your profits while increasing customer satisfaction. A fixed quote up front is always better for customer experience. Ron's laws of pricing is value is subjective and pricing is contextual. In other words, pricing and value are two entirely different things. People buy based on the expectation of a result. People buy your why. People buy experiences. People buy transformations. They don't buy financial statements. They don't buy time. They don't buy data entry. They buy solutions to a problem. They buy the feeling of value at point of purchase. Relative price matters. There's anchoring and framing effects that allow the pricing to have more context than just the number. And there are 8 steps to implementing value pricing. We're going to focus on the first 4 steps, which is value conversation, determining the value, developing options, and presenting the options. This is half of the story. The second half is codifying it, project management, managing scope creep, and performing after-action reviews to make sure that you refine the process. So obviously this presentation is only an hour, so we're only going to cover about half of them. And we are going to cover a very compressed version of a very long presentation. So I may skip through some slides in order to get to the point and make sure that we do cover everything within the hour. So let's start with, what do small business clients want? Well, first of all, they want certainty. They want to know what something is going to cost. No one, and I say no one, likes a surprise bill. If you know someone that does, send it over to me because that's the type of client that I want. But no one likes a surprise bill. Absolutely no one, especially from their accountant, especially from the person that they trust the most to manage numbers. Okay, why would the person that I trust to manage numbers send me a surprise numerical bill? It makes absolutely no sense. Clients do not want an hourly rate if they don't know how long the job is going to take. Now, clients want confidence that their books and their reports are accurate and complete. Clients don't care how long it takes you to do the work. They just want accurate and complete numbers. Clients want peace of mind. They want to know that they're in compliance. They want no penalties. They want to sleep at night to feel that the work that you've done for them is quote unquote audit proof. They want financial statements and reports that help support decision making. They want to make decisions knowing that they're looking at a report or they're looking at a data set that is reliable and their decision is quote unquote justified. Clients want to trust their team. They want to trust that their team are doing the right things. This is what we call internal controls in the CPA world. They want to trust that their accountant can supervise and monitor this, or at least detect gross anomalies. Like no one ever expects an accountant to be an auditor and expect every single error, but they want to make sure that they can trust their accountant to detect this. And clients want to enjoy the fruits of their labor. They want to be profitable. They want to save for retirement. They want to know if they can take a distribution out. They want to know what their taxes are going to be, and they want to be able to take a vacation. And clients want to increase the value of their business, and they want to have an exit strategy. By the way, if this slide resonates with you and this contains any new information, this is good enough to start value pricing. Because if we know what the clients want, we know how to offer them a solution. Now, what are the benefits of value pricing for the firm? One, customer satisfaction and loyalty, right? Clients will always be heavily impressed by a firm that can price, do the work, and not complain and moan about how long something took and send them a surprise bill. The firm will have a mindset to be value driven, right? Because we want to price based on value, then the entire firm is looking for value rather than looking for hours. You get more selective clientele. Now, this is a euphemism for better customers or customers that want to pay more. But selective clientele means clients that are bad, that don't care about value, will self-select out of your firm. And that is okay, or that should be okay. Differentiation, as long as the majority of the profession still charges by the hour, being a value pricing firm will make you different. And that's just one little thing that will make you different, but it will make you monumentally different because pricing is one of the most important things that clients consider before hiring an accounting firm. You will also remove the artificial ceiling. With value price, with hourly billing, we have created an artificial ceiling for our earnings. We said that the most we can earn is equals to the amount of hours that we're awake in the day that we can do work, and then we can attach an hourly rate to it. Value pricing completely diminishes the notion of an artificial ceiling in your profitability, sales, revenue, and capacity. And of course, profitability. Value pricing, well done, will almost always, or it should, render more profits. And the business model, right, with a business model like this, you are now empowered or enabled to satisfy your clients' needs while getting paid what you're worth. Okay, let's talk about having the value conversation. But before, let's run the first polling question. I like to get a good idea. I like to get a pulse for how you feel about hourly rates. And if you charge an hourly rate, what is that average hourly rate? Yes, I know it depends on the work. But for the most part, what is the hourly rate that you charge at the moment? And if you don't, I would love to hear that and choose that option. By the way, feel free to ask questions and comments in the questions box while the presentation happens. Every time there's a break, I'll try to read it. And if there's any pressing questions you have about the content that we are presenting, go ahead and send that. Okay. So we have about a minute left, 89% of the votes. I believe that we must leave the polling question for about a minute. So I'll leave it for about 30 more seconds and I'll share the results. So if you want your CPE, please answer the polling question. So going once, going twice, and I'll go ahead and close the polling question. I'll share it with you because I know all of you are dying to know that number. For some strange reason, and I think this is probably an issue that we all have. We want to know what other people are charging because somehow that's supposed to be contextual for us. And I would say, yes, it is partially contextual, but what other people charge is irrelevant because in our industry, our work is not the same across the board. You can have two CPAs that went to the same school, worked under the same companies, had the same experience, and they can literally deliver two entirely different results. These are personal, professional services. And each individual can greatly, especially in smaller firms, can greatly affect the result. Okay, so 33% of you charge between $100 and $200 an hour. That should be relevant to some folks. There we go. All right, having the value conversation. This is, by the way, this is the most important piece of the whole process. If you can't talk to the client about value, if you can't get the client to talk to you about value, if you can't get attach a number to a service, a number to a result, if you can't attach a feeling to a number, it's very difficult to figure out what the client values. So this is a really important process. And a lot of value pricing experts, they say sort of kind jokingly, but very true, this is where the value pricing theory comes to die. There's a difference between talking about value pricing, right, in a webinar, in a seminar, in a conference, in a book, versus actually talking about value with a client. Huge difference. So this is, I'm going to give you my perception of what I think a value pricing conversation should look like, or more the value conversation should look like. So hopefully you can draw some value out of it and adapt it for yourself. So some value conversation tips. One, I would recommend to research the company, research the business. Find out if they have a website. Read their website. You will be surprised how impactful a conversation about when was the last time they updated the website is. One time I went to a client and I saw their website before I went there. And I noticed at the bottom of the website, it said copyright 2009. And I noticed they had an attempt to do a blog of some sort. And the last article was written in 2010. And the first question I asked is, hey, I was checking out your website. The last time you wrote an article was 2010. And I noticed that it says copyright 2009. You know, just wondering, was that on purpose? Have you updated it? And we literally spent a whole hour talking about the website. But, you know, extrapolating that information from the website helped me understand a lot of context about what the client valued. Two, research the owner or the decision maker, whoever you're meeting with, right? Research them on LinkedIn. You know, where are they hanging out? What type of groups are they hanging out? What are their interests? Connect with them before you meet them. Allow them to stalk you for a little bit. Believe it or not, clients, a lot of potential clients will stalk their service provider in social media before meeting them, and that is a good thing, assuming that you have a good social media strategy. That's a whole nother conversation, but assuming you've done really well at establishing your expertise in social media, give clients the opening to stalking you, because when you walk in, they may ask you some questions about stuff that you've done in the past, and that certainly heavily adds to the credibility. Set up a 10 to 15 minute discovery phone call before you meet them. In my opinion, before you meet anyone, get a good general notion of what they want. I prefer web-based, like with Zoom or GoToMeeting, but you can do it just over the phone. I wouldn't just walk into an appointment without talking to the person first to get a general idea what you want. And then from that conversation, set up an agenda. An agenda tells people you mean business. You're not there to mess around. You're there to achieve something. Even if they're not going to hire you, you are there to achieve something, and they are there to achieve something. So set up an agenda, some bullet points. Now, something I like to do is give the client homework. Okay, I like to give the client homework. I like to say, watch these 3 videos, read these 4 articles. When I walk into our meeting, I need to understand that you have put your effort in understanding where we're going with this, right? What are we trying to achieve? And of course, if you are an expert in the industry, bring in some industry knowledge or some industry questions. If you're going to talk to a realtor in, I don't know, Nevada, you want to know how the real estate market is doing. I mean, how incredibly relevant would be for an accountant to understand their client's market and how that's going to affect their numbers. Okay. So one of the best questions that I've ever read about starting the value conversation, and I think this is just a really great question to ask just to set the whole mood from the get-go, is, Mr. Customer, we will only undertake this engagement if we can agree to our mutual satisfaction that the value we created is greater than the price we are charging you. Is that acceptable? Now, you cannot read this. You have to memorize it. And you have to shut up the minute you finish the question. If they ask for clarification, you state it again. Mr. Customer, we will only undertake this engagement if we can agree to our mutual satisfaction that the value we're creating is greater than the price we're charging you. Is that acceptable? Just that question and nothing else sets the entire mood around we are here to add value and we are not here for price shoppers. Now, this comes from Implementing Value Pricing, which is Ron Baker's book, which I like to call the Bible. Okay, read this book, trust me. And he got that from McKinsey & Company, which is one of the largest consulting firms in the world. Now, the second question I like to ask, and you don't have to ask both, this is more adapted to your personality, is in order to provide the best possible service, it is important to us to meet or exceed every expectation you have about your relationship with a new accountant. I would like to ask you a set of questions that will allow me to understand how your business operates, what you expect from our services, and what your goals are, so we can tailor our services to your needs. Is that okay? The word tailor is extremely important because the minute you say custom and tailor, people take out of their mind that you can be compared with someone else. So you don't have to ask both of them, but I certainly like to ask it. Now, one of the things that needs to happen in the back of your head throughout the entire conversation is you need to discover the answers to these 4 questions. I call it 4 whys, or somebody else calls it 4 whys. I stole this from someone else. I don't know who wrote this, but I think it must be on Ron Baker's book. So why me, right? Why are they looking at my firm? Why are they looking to work with me? What attracted the customer to me? Was it a referral? Did they find me online? Did they find me in social media? Did we meet in the supermarket? All that stuff is very contextual. Why are they interested in working with me or with my firm? Why this, the solution that they're asking for? Why are they asking for that? Why are they diagnosing this as a problem? Why is it important for them to solve this? And why are they looking for an accountant to solve this? Why now? Why didn't they do it last year? Why can't they wait 6 months? What is it about now, the timing, that is important? And there is so much context around timing, right? People can say, "Oh, I'm being audited." Well, now we know why now. Why not? Why not? What would they lose from not moving forward and working with me? Why just not ignore the problem? Why do they need to hire an accountant? What if they just do nothing? So these are the questions that you want to get answers from. You don't ask them like that. You can't say, why me, why this, why now? Some clients are sophisticated enough that they get it and they could answer that. But this is more sort of subliminal as part of the conversation. Now, I'm going to go through a couple of questions that I like to ask. Now, these are going to be a lot of questions, and you could reword them, take them as you want them, copy and paste them into your own guide. I will give you a link to my guide in which I selected a few of these, and I'm making part of my new client questionnaire, which should be helpful. But then you should adapt this to obviously your firm. So question number 1, if you have an accounting or tax question for us, how quickly do you expect an answer? And how do you want that answer, right? Response time to me is one of the key elements of pricing, right? If a client says it must be 2 business days, then you better price for 2 business days. If a client says a week is okay, then you price for a week. If the client says, well, I will tell you when it's urgent, and then you know whether you include urgent in it or you charge additional for urgent. How you want that answer is important. Do you expect a phone call, an email? Do you want an opinion memo with court cases and code sections? Do you want a combination of any of these? Question number 2, how important is it for you that we guarantee our results? In other words, that if we cannot deliver the results that we wrote down we were going to deliver, that we would give you 100% money back guarantee. Okay? The success of Walmart, Target, Best Buy, Amazon is just return it if you're not happy. I don't understand why professional services don't work that way. Okay? Professional services can benefit a lot from guaranteeing their work. Another question is, do you want a specific list of limited set of services for us to provide, or are you looking for the proverbial just take care of my accounting issues type of engagement? You need to ask this, because I found that if you don't have this conversation, clients assume that accountants are there to solve all, quote, accounting, quote, problems. And there's a lot of problems that have nothing to do with accounting, but because it contains a number, it's an accounting problem. Or it contains the name of the state, or it contains the word federal, or the word tax, or license. It's somehow attached to an accounting problem. So if the client tells you, no, I want a specific list of limited services, easier to price. If the client says, no, listen, you're my accountant, I expect you to take care of my accounting issues, that's a different price. You have to price accordingly, and you have to measure the risk around that. Another question that's great to ask is, what are the things that we can do or forget to do that would be an absolute deal breaker for our relationship? And this question requires you to shut up and wait for an answer. Most clients will think about this deeply, because this answer, it's everything. If they say, if you can't respond within 2 days, that's a deal breaker, then you know this is a 2-day response time client. You know that you have to price it accordingly. If the client says, filing late my taxes is a deal breaker, the client could say being mean to me or being rude to me. Or the client can say not responding to my emails. Or the client can say failing to be proactive. That takes you to an incredibly important road to discuss value. How would you define a successful relationship? I love that question. Let people talk. Don't frame it. Don't give them ideas. Just say, how would you define a successful relationship? You will be pleasantly surprised at the plethora of information they will give you when you ask that question. You can ask, if the price is not an issue, how would you describe my ideal role or our ideal role in your organization? How much budget do you have allocated to business growth? Do you know the cost of all your technologies that you're currently using internally? Are you looking for someone to determine the cost? Are you looking for someone to reduce the cost, optimize your investment in technology? Because in accounting, that's a lot. Is your business set up for you to disconnect or take a vacation? There are so many feelings involved with this question. You will build such a deep relationship if your client talks to you about disconnecting from work or taking a vacation. I even get emotional sometimes when clients tell me, yes, I was founded my company 7 years ago. I have not taken a vacation. And you tell someone, my job is to help you take a vacation. You make a real deep impression with that client, because Small business owners, we all suffer from the same issue, overworked. Okay, where do your new clients come from? What does your sales process look like? Incredibly good question to ask. What does your procurement, expense purchase process look like? How do you manage documents? Document management sometimes is a huge pain point. And as accountants, we hold the keys to solving this issue because 9 times out of 10, the documents are related to accounting or some sort of financial transaction. What is the best way we can learn about your business in depth? Sometimes your client can tell you, look, you need to do this and this to understand my business. And by doing that, you're showing interest. You're saying, we want to learn about your business process in depth. And you're asking them for suggestions, how we can learn about your business. What does the word cash flow mean to you? I got to tell you, almost every client I talk to, the word cash flow means a different thing to every single other person. I haven't had one person in which actually somehow gave a coherent answer with someone else. Cash flow means different things to every different person. If you can extract what it means to them, then you can ask, do you believe that I have a role in helping you improve it? You know, what could we take off your plate immediately that will free you up to spend more time to do what matters for you and your business? Awesome question. And the clients will tell you what their priorities are at that point. What do you think we could do to help you reduce your expenditures? Don't suggest them. Ask them, what do you think we can do to increase your sales, to increase the value of your business? Open-ended question. Let the client talk. Is your business on track for an exit strategy? Can it be sold? Does it have any value? Is your business attractive enough to external investors? Is it bankable? That means that you have a low cost of financing. That means you can borrow money cheap enough that it doesn't take away from your profits. Does the business produce enough fund enough to fund your retirement plan? This question is so key. Does your business produce enough to fund your retirement plan? If you ask someone, do you have a retirement plan? That's a personal question. It's a personal attack in their judgment if they don't. But if you say, does your business produce enough to fund your retirement plan? And they say no, you can say, is this something you'd like for me to help you do? Because then it becomes a third-party issue. Then you're both working together to help the business produce enough to fund the retirement plan. No personal attack on their judgment. Now, that link that you see there, it's a link to a client questionnaire that I use sometimes as an exercise, and this kind of helps me, guides me to the process. I'm going to open it up so you see it real quick here. Okay, so basically a four-page Word file, and I adapted this to my own practice, to my system. Some of the questions that are in there are in the presentation. They're here. There's also some additional questions. I urge you to look at it and to adapt it to your system. This is a really good guideline. This took me 7 years to build, and I'm still modifying it and fixing it. Okay, so let's stop for another polling question. And if there are any other type of questions, I will go ahead and answer them. So you can answer your questions. I'd like to know, and this question, honestly, I should have asked before. This should have been the first question. That was my mistake. But just think about how you felt before you started. I think now you feel a little bit better towards it. So Edward is asking, do you go through all these questions in your mind when someone asks you, what would you charge for a 1040 return this year? Value pricing criteria and what price range are in each criteria? You know, that's a good question, Edward. If you're in the business of preparing a personal tax return, then value pricing doesn't work with you. It's not. You're in the business of preparing personal tax returns. But if you're in the business of tax planning, if you're in the business of financial management, if you're in the business of retirement planning, if you're in the business of helping your client navigate tough financial times, helping them save when times are good, help them build wealth, then you adopt value pricing. But if you're an H&R Block, you charge $50 per form or whatever. But this is not what this is for. Value pricing is not for high volume, low value commodity. Value pricing is for deep relationship, transformation, and growth. That's why I mentioned that it's selective clientele. Okay, so I'll share the results of the polling question real quick. So the majority of you are interested on how to implement, which is great. And some people have really had no idea and they're excited about learning something brand new. And it looks like a few people have tried or are in the process or they're committed. So I actually think, and I asked this question because I hope that I can give a little bit to everyone regardless of what stage you are in. So now another really important question, and I learned this recently, is called the Dan Sullivan question. It's called that because the book where the premise is around this question is called the Dan Sullivan question. And it is, if you and I were having a discussion three years from today, and we were looking back at the last 3 years, what needs to have happened in your life, personally and professionally, for you to be happy with your progress? It's an incredibly important question, open-ended. Let the client think about it. Your client will, at that point, if they're honest with you, they will create the entire roadmap about what your role needs to be in order for you to extract maximum value from what you can do for them, and obviously get paid the maximum amount the client is willing to pay. If they're honest with you, and this is a good indication of your rapport, if they will give you the entire roadmap of what your role is for the next 3 years. Now, I like to call this one the Hector Garcia question because I've scrunched this up from all the other questions. This is what I like to call the killer question, right? If I had a magic wand and I could magically give you 1 hour of the day for you to do anything you want, 1 extra hour, professionally or professionally, what would you do with it? Everybody complains that there's not enough hours of the days. We don't have a magic wand, and I cannot make this happen. But people do have 8 hours, 9 hours, 15 hours, whatever it is that they work, doing, and in that case, in some cases, they do mundane things. If your firm achieves taking away that mundane task, the client values nothing, and you can effectively exercise the magic wand and give them that hour back, you want to know what they're going to do with it. Because what they will do with that hour will provide you the context about how much they value the potential results that you can give to them. Remember, 365 hours is 15 full days per year. 355 hours is 40 work days based on a 9-hour work day, more or less. So what could the client do with that? Think about what you could do with that, for that matter. An extra hour in the day would be pretty amazing. So now how do we determine the value? So the clients will never give you a numerical representation of value. They won't give you the number, but the conversation will lead for you to discover it. And there are some key questions that you ask yourself. And so you can't, after a value conversation, you can't give a price. You need a day. You need a day and you need to think about it. So how much value, how much is the value for working with our firm? So how much is it worth, just the fact that they're working with us? Our specialty, our niche, whatever it happens to be. What is the cost to the client if we do not do anything, if we don't get involved? What will it cost the client not to hire us? What are the reasons the client is even considering doing this service, or why are they switching from another provider? Again, you're not asking the client this. You're asking yourself this, and you're working with your team with the information you collected from the first set of questions for this. How much have they paid in the past? It's contextual. Okay, it's not important, but it's contextual. And if they've paid less than what you are going to offer, what did they not get before? Because you never want to get to the point where the client says, but the other guy charged this. But you have to be able to say, yeah, the other guy did not give you what I'm going to give you. So you need to know what that is in order for you to have that argument. The most important one, what is the economic benefit that will derive from the services we provide. What will the client gain economically? Because if your client will gain $50,000 economically from working with us, it's easy to price $40,000 because it's below their economic benefit. Now, not all benefits are economic, but in accounting, a lot of them are. Okay, let's talk about managing the risk of transitioning to value pricing from hourly billing. And I put risk in quotes because we tend to think that the word risk is negative, and the word risk is not. The word risk is possibly negative and it's possibly positive. You cannot get any profits if you're not willing to take a risk. You cannot grow if you're not willing to take a risk. There's no risk in the long term, but of course, it will feel like there's a risk in the short term to transition. So one of the things I suggest is start with your least profitable clients. And that's not always a numerical value. Sometimes it has to do with the resources and the anxiety that they bring to your team. Right? So some clients, they just bring a lot of emotional strain. And these are the ones that you should be okay with losing if they don't want to move forward. Be okay with accepting the fact that you can lose clients in the process. That is okay. This transition is not a choice. You take it or you leave it. You must offer a change in service. It's very difficult to move someone from hourly to fixed and not somehow change something. Change scope, change risk, change results that are guaranteed, and we'll do options. Our options will help us frame that. Communicate the proposed changes in writing and in person. Never send them an email saying, by the way, we switched to fixed rate pricing. Hope that you stay with us. Thank you. No. Right? You propose it in writing, and then you meet them in person. In person could be a web conference or on the phone, but make sure you're there to answer that. Okay? Communicate that you're making this transition in order to maximize the value you can generate only to the customers that are looking for growth and transformation. Let the clients tell you, I'm not looking for growth and transformation, so you can tell them goodbye with pride, because this is about growth and transformation. Scope and options, right? So this is one of the really interesting things, which is, figuring out what is it that the client wants so I can provide the service. So the first thing is you need to write down, what exactly are we going to do? What is the firm going to do? Who is the user of the financial statements? Who is the user of the reports? Is there a third party? And what's the context of that third party, right? When we prepare a tax return, the user is the IRS. What is the context? An audit, going to jail, a penalty. If we do an audit, the user is an investor. What's the consequence? Getting investment funds. All that stuff is important to know. What is the required level of detail, right? Does the client want every transaction from the credit card with the payee, with the memo? Do they want us to attach a receipt to it? Do they want accrual-based accounting? Do they want cash-basis accounting? All this stuff is important for creating your core service scope. How will the firm do the work? Now, this only matters for what I call client-facing processes, observable tasks. So how you arrive to the financial statements doesn't matter to the customer if at the end you just deliver a PDF with it. But if the customer is involved with the process, right, whether it's through emails or maybe they have access to QuickBooks, whatever it happens to be, it matters because they're observing the tasks and their perception of value can be skewed with what they observe. So you need to know what is it that the clients will observe. Now, what does the client have to do or what are they responsible for? Is there any collaboration? And sometimes this collaboration is not good. How much access does a client have to add, edit, delete, or view your work? That's important. Because if the client can't touch your work, that's one price. If the client can touch your work and have to fix it, that's a different price, right? Is there additional support that is included with the service? Does a client need support? A lot of clients need handholding through many things that are even not beyond accounting. So you need to detect that up front because that's part of your core service. Now, risk transference is one of the most important pieces, right? They hire us because they're trying to get something off their shoulders, right? What deadlines do we have to comply with, right? So the client doesn't have to worry about deadlines. We have to worry about deadlines. What risks are we mitigating for the customers? What are the short-term risks that we're helping the client reduce or mitigate? What are the tail end responsibilities of the firm post-engagement? You know, how long after we do the project we are quote unquote in the hook. I guess that's a term here. Let's see. What will the client do or be responsible for? Okay, no, whoops, sorry. What are the external factors that can affect the firm's capacity to do the work accurately or timely? What are the things that can affect the work? Oh, we have to wait for so-and-so to bring the documents, or we have to wait for the team in California to finish the work and send you the report. All those things matter, right? Or, you know, you can only work on Wednesdays. You can only work on Tuesdays. All that stuff matters. Who's responsible for correcting client-created errors, right? A lot of times we don't talk about those things. Do the corrections to the errors, do they happen behind the scenes? Are they seamless to the client? That's key, because a lot of times we're fixing client errors and the clients don't know that we're fixing it, and therefore they don't value it. And sometimes they don't care whether you are fixing them or not. What they care is that there are no errors. So you need to figure out how much risk are they transferring. Now, guaranteeing results is a very interesting piece of our work, especially in our industry. You know, are there objectively measurable results? That's really important. You know, can you measure them? Right? You can't measure peace of mind, but you can measure penalties. So that's really important to know. What are we achieving, and can we measure them? Okay? Or do we have this broad dynamic engagement in which we just take care of business? What are the specific results that the firm is guaranteeing? Now, the word guarantee is a big important word, because a guarantee means that you are in the hook, that you will refund the money, you know, a guarantee or a warranty. In the event of an audit, what is the firm guaranteeing, right? Will the firm refund the client if the results are not achieved? If so, how much? How much is the guarantee, and how much is the potential refund that you can give? Or does the client have a value guarantee where they can adjust the bill based on the perceived value, even after the project is completed, even if they're wrong, because perception is reality. Okay? Let's talk about value pricing new clients. So my first suggestion is, do not present hourly fee as an option. And if you must, and I tell you, I'm in that boat. I'm not an expert at this. I'm still learning. I'm still improving. And I love doing these presentations, because every time I do it, I learn something new, because I reiterate some of the theory that I don't apply. So I'm giving you everything, and a lot of it I apply sometimes, a lot of it I apply certain times. But if you must give an hourly rate, I would use it solely for anchoring effect, to nudge them towards a fixed fee. So if we have a service that we're charging $1,000 a month for, and the client perceives more or less that it will take about 10 hours to do, then I will give them an hourly rate like $450. So when they do the math with the hourly, it's way beyond the fixed fee, and the client gets nudged towards the fixed fee. So only if it's used as an anchoring effect, although the value pricing gurus would definitely disagree with me. Always charge for the initial interview, okay? It's okay to credit the customer afterwards if they agree to the project or agree to hire us ongoing, but never, never, never do the needs assessments for free. The most amount of value is on the delivery of the results. That's number one. Second is on the needs assessment. So why would you give away your second most valuable asset for free? Absolutely not. Not acceptable to give free needs assessment, especially at the level of scope that we're doing it, or we're suggesting that we do it. Document as many details as possible. A lot of times as you are internalizing this and coming up with the price, any detail can come up and be relevant. You know, so these could be a catalyst of a conversation to create the options. and always present 3 options. That's just really powerful, because that creates some guardrails and some levels around, you know, what the customer wants from you, because that stuff could always vary. Okay. Developing and presenting options. So there are 7 T's to presenting options, also from the Ron Baker Value Pricing book. And I'll go through them real quick. And then we'll talk about the actual presentation of the price. So tailoring means, are we redesigning our firm's workflow to conform with the client needs? Are we performing non-standard, unique tasks that may not be automated and are required by the client for us to do with their specific processes? Are we preparing special custom reports? Are we storing or retrieving documents with the client's system? Talent. Does the client request a specific person to perform the work, to sign the work, supervise the work? Does the client require a specific person to serve as the accounting contact for a third party, or a specific person to answer the questions every time they have it? Does the client require interrupted, dedicated, physical presence of a specific person at a specific time and date, and a specific team member? Technology. Is the client using desktop, cloud, hosted, self-hosted, online, manual processes, right? Are they sending you an accountant's copy, whatever it happens to be? Are they working remotely? QuickBooks Online. Working with low-tech banks. Clients that insist with working with what I call crappy banks, that you can't connect and you can't download transactions, I charge them more, because they're not making it easier for me. So I charge them more. So working with clients that facilitate or speed up bank feeds, that helps you work faster. That could be part of the price. Working with apps to reduce double data entry, that's important. Does the client need us to scan a whole bunch of handwritten paperwork, or do we need to work with handwritten paperwork? Terms. Is the client paying us in cash, credit card, check, wire, Bitcoin, on trade? Trade is important, right? Is the client giving us stuff in exchange for our work? Are they paying in advance? Are they paying in arrears? Are they prepaying long-term services? Are we charging penalties for late payment or not payment? Are there forbearance options if the client can't afford it? What is the exit strategy in the middle of the project if the client wants to stop working with us? Will we give them a service interruption if they stop paying? All that stuff is really important. Timing. When does the client need the work by? When can the firm start the work? How quickly will the client respond to questions? What times can we work at? Is the client willing to do extensions? Is the client hiring us during peak season? After project completion, how much time do we need to be available, or the specific team members that were in the project, to be available to answer questions or retrieve documents? Transference. Will the client require unique training or education? How much explaining or hand-holding do we have to do when navigating financial statements or reports? How often does the client have accounting questions, right? They need information from us that is not in the scope of work. How detailed does the client need when answering questions and giving tax opinions or whatever? Will the client require the firm to document projects, notes, procedures, instructions? Do we need to give them a manual at the end of the project? So let's bring this home, okay? Let's assume that we figured out what the base core options that the client walked in needing. They need us to provide monthly accounting services. Simple, easy. And it's $275 our base. Now, we take that core that includes no options, and then we add options and layers to it. So before doing that, let me run a third polling question. And while the polling question is up, I need to answer a couple of questions that are in the questions box. Howard says, do you call it value pricing with the client, or do you call it fixed services? Howard, the answer is, we call it fixed services. We always call it fixed services. Never call it value pricing. It's confusing. Fixed price, fixed fee. Edward says that my answer about 1040s was a little bit curt, because you don't want to deep dive. Let me see. don't you want to deep dive and find out if what the client's situation is or there before can use value pricing even for a 1040 return? So yeah, Edward, sorry, I was a little bit short on my answer. So I would say yes, there is absolutely, there is a probability that even if you do just personal tax returns, you can value price it, absolutely. But I thought that at the beginning, your question was like, these are, low value, high volume services. Do we even have time to go through this whole thing just for a personal tax return? So yeah, no, so I absolutely agree that you can do value pricing with any size product or service. So I apologize. I did not mean to say that if you prepare tax returns, it's not value pricing. You can absolutely value price, Edward. There's a couple of questions about the business size. It's like, you're talking about big clients, big scope, big services. This doesn't apply to small firms. Now, I like to respond to that. I'm giving you a very large presentation of a potentially very large project. You don't have to use the whole thing. Take pieces from it. Right? Adapt it to yourself. Make it simpler. Like, I promise you, I don't go to a client and I go through all these questions. I absolutely don't, right? I do about a third or maybe 25% of them. I'm giving you the entire body of work of what I learned so you can take from it what works best for you. The company size doesn't matter. The project doesn't matter. What matters is that you're taking the time to understand what the client values, and then you can determine what you can price. You can value price $100 project, okay? The point is that you don't charge by the hour. It is that simple. Now, in your opinion, what is the most important element of value pricing? So according to my presentation so far, the majority of you says getting the client to commit to pay for quality. And that's exactly what my point is. You have this conversation, most of it, and the client will commit to pay for quality. And if they don't, next. Okay? So let's talk about creating options. So for example, within each of the 7 elements of options, timing, tailoring, you can actually figure out, you build a mini matrix on each one. Like, look, if the client needs me to do the work by the 21st, I won't charge a premium. If they need it by the 14th, I'll charge $25 premium. If they need it by the 7th, I'll charge $100 premium, right? If the client needs us to use their technology, they don't want to use any of ours, I'll charge a $200 premium, for example. If the client needs to speak to Hector and Hector only, right? But it's okay with doing it once a month for an hour, that's fine. I can make that part of my services. But no, the client needs unlimited access to Hector via phone at any point in time, and they want to meet us in person for at least 2 hours. Well, I will charge a $250 premium for that, right? Now, this is not a menu. You're not going to give the client a menu. This is a matrix you build, and I'll show you how you construct it afterwards. You can do the same thing with terms. You can do, and at the end, once you look at all of them, you pick a few at random and you construct 3 different services based on the premiums, right? One that includes everything best, everything better, everything good, and then you tack on the premium to your base, and that's how you come up with your package price. And you give it a name. You give it a name that's sexy. You give it a name that the client will connect with. You give it a name that maybe contains some of the wording related to the industry, right? That sort of thing, right? Like if you're dealing with a realtor, you call one beach house, right? And you call the other one, vacation home, and you call the other one, primary residence service, right? But you can play with words so the clients feel that you're connected to what they do and how they do it. And then you break them down into the 7 options or maybe 5 options, whichever one you use, and you present them in a matrix like this. So you price them with the 3 prices and the features. And clients love this. This is such a good way to present your services, such a professional way to present your services. And a lot of people ask me about the factors, like, well, how far should the low option be from the middle option and then from the high option? Well, I don't have a clear answer on that. There's no rule. There's no formula. I usually like to do between 55 to 65% of the middle option, make that the low option, and about almost double or close to double the high option. So there's no rule around that. You can do whatever you want. Okay, so if you download the worksheet, the link is here on the screen. You will have, this is my worksheet that I use. You'll be able to kind of just draw this out yourself, write it down yourself. This will help you build your 3 options. And then at the end, obviously, just type it up for the client. But I find it easier to write it down at first because it helps you build the system. So there's a couple of resources there. There's, I have what I call the value pricing long notes. It's about a 30-page document, which I'll explain all these things in detail. In my website, I have what I call the value pricing cheat sheet, which is actually a 1-page summary of this whole thing that you can take to your clients. It will help you kind of build this up. The questionnaire that I mentioned, the options worksheet. I also pre-recorded an expanded version of this webinar that's 2 hours long that includes examples with QuickBooks Online, wholesale billing. The link is there. And I also reviewed something called The 30 Elements of Value by Bain & Co., which is an extremely important piece of understanding the psychology of value to the process. Okay, so I'm going to open it up for questions. We have about 2 to 3 minutes left. I'm also going to run the last polling question so you can get your CPE. And I really, really appreciate all of you guys that stayed live and asked questions and added comments. I won't get offended. You can ask any questions, comment anything. Go ahead and put them in the questions box, and I'll address them if you want to. And also, go ahead and answer the last polling question for your CPE. So one question here is, do you recommend to do this only with new clients? Because I find it difficult to convert some of my existing clients. You know what? That's a good question. Unfortunately, we are creatures of habit. And our current clients may be used to working one way. And they may not take the shock value of transforming to a value-based firm. And there's a risk to losing clients when you do this because, as I said, I think this is a take it or leave it situation. So I would say do baby steps. In my opinion, if you can get a couple done, maybe 2 or 3 from your existing client base, but you do it 100% for new clients, it will help because you need to screw this up a few times before you get it right. So the question is, do you want to screw it up with new potential customers and prospects, or do you want to screw it up with existing customers? So, okay, so that's, I'm going to go ahead and close the polling question just to share with you what the results were. So 10% of you said that I need to be convinced that this could actually draw a profit. 45% means I would like to get more understanding about the implementation process or going deeper in implementation. 3% of you says maybe another speaker can explain things differently and be better. That's okay. And 4% said this topic is not useful for you. And 38% says no need to hear more. I think I get the general idea. Awesome. Okay. So to the 10 and 45%, we will discuss with CPA Academy about maybe some more topics around something deeper around this matter. Either way, I really, really appreciate you being through the whole presentation, asking questions, and being involved.